Joining us now is the analyst behind that note, Mark Mahaney. Mark, great to see you.
Hey, Morgan.
So talk us through why you're raising the price target.
We did our quarterly survey work in the U.S. I think it was our 39th quarterly U.S. Netflix survey, and then we did our second annual India survey, and we saw incrementally positive data points. We now have penetration rates in the U.S. for Netflix that are back at COVID peak levels. That's a positive. We see satisfaction rates seeming to stabilize. Now, there's still this issue of churn for Netflix in the U.S. that's elevated, and it probably says something about how mature the market is for, not saturated, but mature the market is for Netflix in the U.S. But another reason is we called this last quarter kind of a clearing event because we think we're beyond the production delays caused by COVID, and we know the slate is getting stronger. Just this last weekend, we had Money Heist, or Casa de Papel, Season 5 launch. And this, believe it or not, is the most popular show that Netflix has worldwide, except for Stranger Things. So it's the second most popular show. And we looked at the content slate for Q4 and next year, where you're going to get the renewals on shows like Stranger Things, but Bridgerton, Ozark. We think as the content slate improves, the sub growth will improve, the stock will improve, and I think that's exactly what the stock is anticipating now.
I mean, you're running through a list that I know I myself am interested in seeing some of those shows, so I can imagine, to your point, U.S. versus international. I guess where is the bigger opportunity then from a potential profit standpoint for this company moving forward?
I think it has to be international. And, look, I keep doing these U.S. surveys. The truth of the matter is less than 10% of the sub growth for Netflix now is in the U.S. It's 90% driven. The sub ads are going to come from international markets. So frankly, these U.S. surveys get less and less useful, less and less of a read. Nonetheless, it's still interesting to track them. Look, the growth is in international markets. They're very strong in most parts of the world, but particularly in Western Europe and in Latin America, where Netflix now needs to prove its next major legs of growth are in Asia-Pacific markets, particularly in India. And then they've started to roll out a mobile-only plan across large parts of Southeast Asia and Middle East and Africa. So those are kind of the next growth areas we'll be focused on.
So, and do you think the stock will react to that, Mark? I mean, do you expect that U.S. subs will continue to sort of plateau over the next few quarters? And if it does, is that not what the stock really focuses on more than international?
Well, Wilfred, you're right. It certainly focuses on subscriber growth more than anything else. And I'll tell you, there's one number that we're all going to fixate on when we talk about Netflix earnings in a little over a month from now, which is the fourth quarter sub growth guide. If this company guides, and they're only going to give one number for sub growth, if they guide to 6 to 7 to 8 million net adds, this stock will break through and go higher than here, because that's the cadence at which they added subs back in 17, 18, and 19. And people will say, well, Netflix has got its growth mojo back. It certainly had more than mojo during the COVID year, less than mojo this year. And if they can show that they're going to get back to that kind of pre-COVID cadence of pretty strong 20 to 25 million sub ads a year, I think that's the story's over in a good way, and I think the stock would go higher.
I just want to ask as well, Mark, what do you think the significance were of Disney's box office success over this past Labor Day weekend, and whether it really changes the debate, not so much for the movie theater operators, but for Disney, and comparing it to Black Widow, whether they're just going to keep holding back these big blockbuster hits for movie theaters again?
I'm not sure about that, but there's one thing about Disney I found fascinating. If you look at the chart of Netflix, the point at which it actually got completely unlocked, where the stock really started to move, was the day that Disney announced its earnings. And that was, I think it's August 12th. You can look at the chart, pull it up. And what I find so interesting about it is Disney had big sub numbers that they referred to, but if you peel out the Hotstar India subscriber numbers, what you see is that Disney is growing at the same clip as Netflix, i.e. they're both growing. They're adding about 5.5 million subscribers year to date, i.e. the market is really moving to a streaming bundle. Most consumers, a lot of consumers, are willing to buy 1, 2, 3 streaming services. So there's enough room for both Netflix and Disney to grow. There's no evidence in those Disney numbers that Disney is taking share away from Netflix. That's what caused this. That's what helped cause Netflix shares to take off.
Mark Mahaney, great to see you as always. Thank you.
Thank you, Wilfred.